Welcome to Stock Phoenix. Myself Senthil Kumar, the mentor of the program. And in today's session, we are going to learn about the basics of stock market. So, which is like very important session. Let's start. So, why we are here? In today's session, we are going to learn about the basics of stock market, which will help us to manage the profit and loss effectively. And once you complete the program, again, we should not forget the basics to become financially freedom or independent. Okay, so basics are very important. Never ever forget the basics. So whenever you start moving away from the basics, kindly have a recap of the same webinar. So the first thing is we have to know about SEBI. So the regulatory body of the exchange, that is the Indian stock market, that is like various stock markets like equities, commodities, currencies. So like RBI is the governing body of the banks. So SEBI, the Securities Exchange and Exchange Board of India, is the regulatory authority in India to manage and protect the investors' funds, whoever is trading in the Indian stock market. The role is protecting the interest of the investors in securities, promoting and development of the securities market, regulating the securities market. That is like any rules or norms which is to be changed by the exchange, so that is to be approved by the SEBI. So any escalations you have with the broker or any grievances like misorders or whatever happens, any problems with the brokers, so you can escalate to SEBI. Next. So segments. So the various segments of Indian stock market is like the NSE, National Stock Exchange, which is recently came back 10-15 years back, and the huge volume which is getting traded in India is National Stock Exchange, and the segments are like Nifty and stocks. Everything is getting traded in NSE. And next is BSE, Bombay Stock Exchange, like a very traditional stock exchange, Bombay Stock Exchange. Now considerably volumes are little bit low. In the trading volume is little bit low, which is like not so good as National Stock Exchange, NSE. And IPO, initial public offer, secondary market. These all things we will be seeing in the worked out examples now. And in NSE, you can see the trading segments are index, cash, future, options. So which will be seeing the slide now. And next, the next type of exchange is multi-commodity exchange, which is which allows to traders into metals, oils, energy, and agri products. And next is NCDEX, which is there for agri products. And next is Forex exchange, Forex, that is included in NSE and MCX, so which allows us to trade in currency products like USD INR, JPY INR, Euro INR, GBP INR. Another three more pairs has been included, so which all can be traded in Indian stock market. So market timings. So equity market, that is for NSE and BSE. The market timings are in between 9:00 AM to 3:30 PM. So 9 to 9:07 it's being a pre-market, and there will be 7 minutes of break, and again 9:15 the live market will start resuming, and we can able to effectively start trading from 9:15 AM to 3:30 PM. And commodity 9 AM to 11:55 PM. So winter and summer, depending upon the winter and summer, it varies the closure in between 11:55 to 11:30. So it depends on a season to season. So it's the prolonged market timing, the commodity exchange, that is MCX. And next, currency segments we can trade in NSE and BSE, and the timings are 9 AM to 5 PM. So it's not like there is no pre-opening. We can start trading immediately from 9:00 to 5:00 PM. So these are the market timings of Indian stock market. So equity and commodity. So before entering into equities and commodities, let me explain you the basics of few more things. Let's get into the worked example sheet. Let me see anything is left out. So you can see here market timing 9 a.m. to 9:07 a.m. The pre-market for equities. So in that time you can able to see which stocks are in gap up or gap down. So what is the difference of yesterday's closure and today's opening? Today 9:15, what is going to be the opening? You can able to check that into the NSE pre-market timing. So how to check NSE pre-market? Open a browser, NSE pre-market. Always get into NSE site itself to get the real-time and accurate data. So that will help us to understand the real-time data. So you can see. So these are the data. These are the things changes which has happened in between 9.9.00 to 9.07 a.m. So in the pre-market timing. So in this timings, we can able to understand. Assume that if you are holding HCL stock from yesterday, so you can able to see that this stock is going to have a change of minus 6 rupee 40 paisa comparing yesterday to today. So you can plan accordingly how to execute your trades based upon your holdings. So same like that, it will show you the positive and the negative stocks, everything you can able to see here. Since the last session was negative, there was a huge gap down, so we can able to see all the stocks are into negative segments, into negative ranges. So if you want to see all other stocks, you can able to change the segments here, Nifty, Bank, SME, all. If you put all, it will show you for the all the stocks which is getting traded in the equities. You can able to see. So what all the stocks which is getting traded in a national stock exchange, you can able to see all the data, all the stocks which is available here. So 9.07 to 9:15 a.m. it's a break, and after that 9:15 a.m. to 3:30 p.m. it's a live market. So let me see what is left out. Fine. So let's go with the PPT. So what is Nifty? The components of Nifty, all those are coming into the picture now. So equity and commodities. So the explanation, equity in the sense trading in company shares, company stocks or company shares, which is called as equities. That is, you can trade in index, you can trade in index, you can trade in index is nothing but Nifty and Bank Nifty, and the composition of Nifty. The composition of Nifty, when you take, it is a top 50 companies average is the composition of Nifty. Trading in one lot Nifty and trading in one shares of the 50 companies more or less like equal. So this Nifty is the face of our economic phase. So Nifty, if say like for example, when you see that Nifty is positive by 300%, then we can tell that the Indian economy is good, and when it is negative by 2 or 3%, we can tell that it is going bad. Okay, next. So same like that, Bank Nifty, there are certain banks which is getting traded, that is PSU banks and private banks which is traded in Bank Nifty. So that we will see in the separate session. So next, stocks, shares or script, everything is called the individual company stocks. So that is ICICI Bank, Reliance, TCS. So these all are the stocks which we tell as stocks or shares or script. So whatever we are going to tell, these three terms which will represent the individual stocks. And whenever I tell us market is nothing but we represent Nifty as a market. We represent Nifty as a market. So when I tell that market is going up and market is coming down, so that everything is being represented for Nifty. Okay. So next is derivatives, future and options is the advanced study in NSE, NSE. So that we will be having a separate session in the course curriculum. So commodity and currency. So commodity and currency, there is no cash market. So we have to trade only in derivatives, that is future and options. So trading methods. So before entering into trading methods, so let's understand what is cash and retail market. What is cash and retail market? So cash market in the sense, you are going to buy any stock with your own fund and you can hold it for any number of days, or you can sell it in the same day itself depending upon your flexibility. So that is called as cash or retail market. That means, just let's go with small examples. Say like for example, if you are having a, say like for example, if you are having 10,000 rupees, say like you want to buy one share of Reliance. So that is approximately today around 1,300 rupees. You can buy one share of Reliance. You want to buy two shares of PNB, Punjab National Bank. Say like for example, 60 rupees per share. You can buy 2 into 60. So like this, you can buy any number of shares in any number of quantities. There is no denomination applicable. So with your actual capital of 10,000 rupees, you can buy any number of share. It's like a retail shopping. So, and you can hold it as per your flexibility, because it's going to be your property or asset. So there is no claims. So you can, you want to hold it for 3 days, you can hold it for 3 days. You want to hold it for 10 years, you can hold it for 10 years. So everything is possible in cash and retail market, provided if you are going to hold it with your own fund, there is no restrictions. So in cash and retail market, we have different types of trading methods, different type of trading methods. So which is like trading methods are intraday. Intraday in the sense, these are the different types of trading methods. We will be using it, or we will be learning it in the course curriculum. And let's understand that. Intraday in the sense, buying and selling the stocks or scripts in the same day before the market close, after market opens and before market close, we have to sell it. So that means, so intraday trading. So buying and selling in the same day, buying and selling in the same day. So if you are buying, say like for example, 100 shares of ABC stock at 100 rupees, and you are seeing the stock is moving 2 rupees upside. You are buying 100 shares of ABC stock at 100 rupees. You are seeing the stock is moving upside 102 into 100. Say like for example, there is a profit of 200 rupees. You can book the profit in the same day and you can close it. Intraday trading in the sense, you have to close the trading before the end of the market. So whether it may be a equity or commodity or currencies, you have to close it at the end of the particular market timings. So that is called as intraday trading. So buying and selling in the same day, and also selling and buying in the same day is also possible. That is called as short selling. We will be learning in the next sessions. And the same thing can be done for cash, future, and options. So the intraday trading methods can be done in cash, future, and options. Next, BTST. Next, the next trading term is BTST or STBT. That means buy today, sell tomorrow. You can see here, buy today, sell tomorrow. And this is possible in cash, future, and options. Sell today, buy tomorrow, which is again, it is possible only in future stocks and options. So that is only possible. That we will learn later. The complexity of the futures we will learn later. So BTST and STBT in the sense, say like for example, you are analyzing a stock which is going to go up by 2 or 3% in the next 2 or 3 days. Then we will pick that stock as a BTST or STBT. STBT in the sense, you are analyzing a stock which is going to go down in the next 2 or 3 days. Then you will be picking that stock for a short selling, and that is called as STBT. So maybe like within 4 days, 4 or 5 days as a maximum number of days, that is called as BTST and STBT. Next, delivery trading. So delivery trading in the sense, buying today and selling any day. That means, say like for example, today market is opening. By 1 o'clock, you are buying some position. Say like you are buying 100 shares of ABC company into 60 rupees. You are buying ABC company stocks, 100 shares into 60 rupees. So you are going to hold this for the next trading session. You are going to hold this for the next trading session. So that means any number of days. Say like for example, you can sell it on the next day morning, or 10 days, 15 days. As I told you, there is no restrictions, because you are buying with your own fund, own cash limit. So that is called as delivery, buying today and selling any day. Swing trades. So swing trades in the sense buying and selling, holding for a couple of days or weeks, say like for example 5 to 15 days approximately, as per Stock Phoenix method we'll be holding it for maximum number of 15 days. And I'll tell you, swing trading is the most profitable method. Swing trading is the most profitable method. The reason is you can take the complete momentum or the movement of market. Once your analysis or your stop loss is perfect, you can take the complete benefit of the momentum. Say like for example, the example for swing traders, say like for example, you are analyzing a stock, buy at 500 rupees. You are going to buy the stock at 500 rupees and you are expecting in the next 7 to 15 days it will reach 550 rupees. That is 10% upside with a stop loss of 480. That is 20 rupees in the negative side. You are ready to hold the position. So to take the complete momentum, you have to hold the stocks for 5 to 15 days, because we don't know actually when it is going to reach the target or the expected price. So this is called as swing trades. Maybe it can be 15 days, 20 days, or it can be even couple of weeks. Couple of weeks in the sense 3 weeks, 4 weeks, 5 weeks. Yes, that is also called as swing trades. Next, positional trade, which is also again called as delivery trading. Positional trades. So swing trade is also called as delivery trading because you are taking a position and you are going to hold it for the next trading session. Again, it's a part of delivery trading. So positional trade, let's see. Scalping will come into scalping now. Okay, so positional trade, again it's like a short-term positional trade. We can differentiate into short-term position, long-term position. Short-term position in the sense 1 to 6 months, and long-term position in the sense 6 months and above. But as per the today's market condition, I don't suggest you to hold the positions more than 15-20 days, because today market situation is not so reliable to hold a stock for hold the stock as a multi-bagger, other than very few. So it's always recommended or always suggested you to do a delivery trading based on 5 to 15 days holding period. That is far sufficient. Your capital also will not be locked. You can churn it multiple times on a yearly basis. Next, scalping method. Scalping method in the sense, number one, it's a pure intraday method. That is, we will be closing the trades, we will be closing the positions in the same day, and buying and selling in some time for a small profits. That means we'll buy a share for 100 rupees and we'll sell it for 101. That is for a small profit, 1%, half percent, 0.75%, 1.5%. So we'll do multiple tradings in the same day in different scripts, or maybe in the same scripts for a small profits. So that is called as scalping trades. So we buy a position, we'll not be holding more than say like 1 hour, 2 hour. We'll be holding maximum only by that time with a small stop loss. So that is called as scalper. That is called as scalping trade, and these kind of traders are called as scalpers. Next. So types of trading terminals. So everyone will be having a demat account. So now let's see what are all the types of trading account which is available. So let's go with Upstox, because it's very difficult to explain all the brokers. So when you see here the product and tools, you can see the famous or the most popular platform is ProWeb. That means you can see here it's a web-based browser application with your credentials. Once you input your credentials, you can access it anywhere in any computer, laptop, desktop, or even in your tab. You can able to start using this, or in your mobile browser you can start using this. So instantly it is accessible and it is very fast. It's very good, and the most of the say like 95% of the today's community are using, or most popularly used is this kind of trading terminals. And all our technical analysis course is going to be based on this browser based terminal only. because it's easy, fast to use, and accessible anywhere. Say like for example, you are traveling, so you don't have your desktop or PC with you or laptop with you. You can get into anywhere and you can start using it instantly with your own settings. That is very important. So you can see a powerful charts, 100 plus indicators, and what all, everything is available here. Everything is available here. So this is browser based or web based platform. Next, Pro Mobile. So this is an installer based platform which is to be installed in your iOS Apple phone or your Android phone. So again, it's like, it's very good. So say like, if you are very serious in your trading, and if you are going to be a full-time trader, then mostly don't rely on the mobile based platform. It's good, there is no doubt the platform is good, but the problem is the internet connectivity with our network providers. So we cannot able to tell that we are getting continuous signals. Maybe we know that while speaking itself there is a drop in voice. That is because the data connectivity or the signal connectivity goes dip and again it comes on. So don't completely rely on this mobile based platform. It is good to watch, it is good to trade, but don't completely rely on this. Other than that, you can see your charts, everything is available in this web based platform, in this mobile based application. Next, next is installer based platform. Installer based platform in the sense, you can see here Dart Stock or Nest Trader. So these both are installer based application. So once you start installing this, for example, let me take with Dart Stock. So everything, wherever you click on that, your user ID and password is required to input the credentials, and you can access. You can see here, you can add multiple watch lists. It's a predefined chart setups. Everything is available. If you are going to be a full-time trader, and if your primary income is going to be on or from stock market, then yes, it is very important to be using this installer based platform, and you have to take you should get used with this interface. So that is very important. Other than that, web-based platform is perfectly fine. Web-based platform is perfectly fine. So it's a free application only from Upstocks. You can see here, and you can cancel this. It's not required now. So these are the types of trading terminal, and let me log in my terminal. There will be a two-factor authentication, and I'm going to show you the options which is available in this web-based or browser-based trading terminal, because it's very difficult to give a detailed explanation on everything. So always we'll be learning our analysis based on this particular web-based only. So we'll go by this. So we'll see the options which is available here. And before that, let me see what is to be covered. We'll go as per the slides. So we have seen this. But before this, let me see the Excel itself. Okay, types of thing we have covered. Next is basics, how to use the terminal. So that is what we are going to see now. So in this, let me expand. This is a default interface. You can see here trading beta. So it's a default interface which will be available in this trading terminal. And if whatever the stocks you want to add, you can see, for example, Reliance is already added. SBIM. So State Bank of India. If you want to add, you can add just by typing the symbol name, and you can give an add. It will be added here. Say like for example, you want to add State Bank of India future. You can add here. So and delete. Again, it's a very simple thing. Delete. So next. So if you want to see a chart of this particular symbol, load chart. That's all. You will be getting the chart interface here. So now let's understand. Let me enlarge and understand what is the all options which is available here. So from left, top, you can see here, this is the option to change the time frame. This is the option to change the time frame. What is the time slot you want to keep the charts? So chart study we will see later. So just accessibility we are seeing here. Next, say like for example, you want to see 15-minute chart. So then you will get a 15-minute chart. This charting platform. Next, you want to change into daily. Again, daily will be available. Next, the type of candlesticks. For example, what is the types of candlesticks you want to change? Renko, various indicators are available, but our study completely it will be based on candlesticks, which is called as traditional Japanese candlesticks. Let it be by default by itself. Next, the indicators. So how we are going to add the indicators? Say like for example, you want to add RSI. Click on RSI, apply. You want to add moving average. Click on moving average. What is the metrics you want to keep here? Keep the metrics, apply, it is added. So how you want to delete something? Delete or clear all. So this is the way to add and delete indicators. Other than that, there is a basic settings. Let it be like this itself. You can add day break. So other than that, let it be a basic settings. And apart from that, when you see in the left side, so trend lines and there is a option to mark the symbols and all those things, which is not a part of our curriculum. So marking trend line study is a little bit complicated. So for every stocks we have to mark it manually with different time slots. So we are not having a study based on that. A Fibonacci retracement and minimize, maximize. That's it. So no much things to do here in the left side. So coming back to this session, you can see here there is a shortcut to see which is the index view you want to see. If you're a Sensex viewer, you can keep Sensex, or if you want to see Nifty, you can see Nifty. So generally Nifty is required, and after the Nifty bank is required, or else you want to change to anything, you can change it. And here M to M, mark to market, or mark to mark in the sense it will show you the current profit and loss of that particular day trading. Next, you can see here the market status. Nothing much is required here. Change password, keyboard shortcuts, and changing the theme. So say like for example, someone don't like the white theme, so that means you can change it into the dark theme here. So say like you want to see the charts background on black, you can change it. Generally we are used with the day theme, that is the white background theme only. And next, funds. So here in equities it will show you current balance. My balance is 1,37,040 rupees. This is my current balance. And what is the amount you have used for the current trading session, the trading day, and the mark to market. What is the profit and loss? Everything will be available here, and the information will be available here. And if you want to add some funds from bank, so click on the amount. So select for example 1,000 rupees and click on the my registered bank is this particular. You have to transfer and withdraw to the same bank which you have given at the time of account opening. Click on this. Various options are available. UPI, net banking, everything is available. Only UPI and net banking is available. So you can see here it will go to the options to make the payments. Next, select for example you want to withdraw funds. Select withdraw funds. You want to withdraw 100 rupees. Select whatever may be the amount. You want to withdraw some amount. Click on withdraw. So that's all. Withdrawal request is taken. So I don't want to do that. So I am doing a cancel. Other than that, select for example you want to open multiple charts in the same trading terminal, trading platform. Add workspace. Give a name. Add widget chart. Give the name. The chart is open. Again, add widget chart. Give a name. The chart is open. So by this you can able to see multiple charts, say like up to 3-4 charts you can see comfortably. And you can add what is the position, the order book, trading book, all those things you can add. So that we will come back again as per the sheet. So we have seen how to use the terminal, how to place orders. Yes, I'll come back for that. And before that, we will see what is order book. You can see here the number of orders we have placed, the orders which is executed and pending to execute, pending to yet to execute, which will be available here, and the orders which is executed, which will be available here. That is the traded quantity which cannot be modified. Already, see, before making any positions, be clear that do you want to buy? Are you sure about the analysis? Then you buy. Once the orders becomes the trades, it cannot be reversed. You cannot change that at any point of time. Next, if you are holding any positions, it will be available here. It is whether it may be a future or options. Next, holdings. If you are having any stocks as a delivery trades, which is in your DP, which will be available here. So these are the four places you can able to check the informations of your trading for that particular day and the holding for overall. So order book is done, trade book, positions. Okay, modifying order. For example, you placed an order for buying a stock for 100 rupees. The stock has moved to 105. So you want to change. You can just right click, or you can just do a right click, and there will be option called modify. You can change the order according to the market price or as per your wish. Before entering to this, let me complete how to place orders. See, now it's like every broker is having a different type of definition for the order types, and different type of exposure or margins they are providing, so that you have to learn by yourself. What I can do is I can able to show you what Upstocks is offering, because that is going to be our learning platform. So what Upstocks is offering, so I can able to show you. Say, like for example, the different types of orders we are going to learn now. You want to buy, you can see here, click on B, and you want to do an intraday trade. Yes, you have to select here as an intraday or delivery. Okay, you want to select here as an intraday or delivery. You want to carry forward the position. Yes, you have to change into delivery. Next, quantity, whatever the number of quantity, 10, 50, 100. The stock is at 270. You want to buy at 268. Yes, done. You can place your orders. That's all. Click on double click, place your orders. Say, like for example, you want to buy on a intraday mode. So in intraday mode, always trade with stop loss. Intraday trade, not only an intraday trade, intraday or a delivery trade which is without a stop loss. It's like you are heading to a place you don't know where you are going to end up. There will be a dead end or there will be a big trap. So always trade with stop loss. So we have a separate explanation, a slide on stop loss. I'll explain that. So always trade with stop loss. Okay, so you can see here, you can go with the cover order, CO in the sense cover order. Okay, so say, like for example, you want to buy 100 quantity, and this place you have to click on limit. If you click on market, what happens? It will take you to the price which is running in the current market price. So always click on limit. You want to, the market price is 270 and you want to buy a 268 or even 270.5. So click on the price. Say, like for example, you want to take 3 points of stop loss. Mention how much is the stop loss you want to take. Click on buy. Stop loss must, okay, 268. Click on this. You can place an order. You can see here the order is rejected because there is no live market now. Okay, next. So you want to modify order, you can click on this, retry order, details. Once it's a pending order, once it is executed, you will be getting an option to modify order. So this is for a buying, and again same thing, it's for a selling. So if you want to do a short sell, again select on intraday. For short selling, never ever do an open short selling. You should do only on a intraday methods. You should be doing only on a intraday methods, or else it will go for an auction. So simple, you can go for a cover order, you can go for a limit price, say put the quantity, say like 270.5. Now stop loss will come upper side 273, sell. So this is how to place normal orders. Okay. So there are different types of orders. The best way to learn all the order flow or all the technical terms is invest or transfer 500 rupees in your trading account. Transfer just 500 rupees in your trading account and do all your test trading with Ashok Leland share or any share which is around 50 to 100 rupees. You can take one shares and you can start putting the start marking the order type so that the maximum loss will be 1 or 2 rupees. You can see here 70, 67. The maximum loss will be less than 5 rupees. The maximum loss and profit will be less than 5 rupees. You do all the testing with one small penny stock and you can get experienced. So live trades is required. Don't just write in a paper. Live trades is required so that you can understand why the stock, why the order is getting rejected, what is the purpose. Try all the types of order, whatever you want to learn. So our learning will be on a basic simple order flow, that is a buy, a stop loss and a target. So that we'll be learning in the session. So MIS delivery CNC, that is what we have learned here. You can see here delivery in the sense I'm going to take a delivery position in my own funds. So intraday in the sense I'm very clear that I'm going to close the position before the market closes and never enter into a intraday session after 2 o'clock because you are not going to give time for the market. So stop loss, trailing stop loss, yes, I'll come to that. Modifying orders, it's done. Let's see what is left out. Different types of orders we have seen. So let's understand what to teach you first. Okay, let me get into what is stop loss. Stop loss in the sense, so let's it's a very important factor in stock market, commodities, currencies. If you don't respect or if you don't honor stop loss, your capital will get wiped out in no time. I'm repeating again, if you trade or if you if you don't respect, if you trade without a stop loss or if you don't uh, respect stop loss or if you don't follow stop loss, you cannot able to be in market for a long time. Market will throw away in a period of time, in a period of say like 2-3 weeks. That's all. Whatever may be the capital will get wiped out because that is the phase, that is the real phase of the market. So always trade with stop loss. So let's understand what is stop loss. Say like for example, I am buying a share of 500 rupees. Share price is 500 rupees. Share price is 500 rupees. And I am analyzing that this share will move up to, that is called as target. That means we should know where we are heading. We should know where we are heading, how much this share is going to travel. So we should anticipate that. That all will be coming in the consecutive sessions. So I'm expecting this stock to reach to 550 and time. So this is again a very important factor to understand. So say like 5 to 15 days. So now what if it goes down? What if it goes down? So number of shares 100. So what is the amount invested? 100 into 500. So I have invested 50,000 rupees and expecting a profit of 5,000 rupees in 5 to 15 days. That's fine, absolutely fine if it is moving towards our favorable direction. But if it is going reverse, say like for example, you may feel that the moment I bought the share, it is completely going down. I don't know where it is going to head. So that is the reason we have to keep something called a stop loss. So as per Stock Phoenix, the default stop loss in delivery trading is 5%. Okay, let's assume a small stop loss at 3%, for example, 3%. So now what is the 3% of 500? That is 15 rupees, or we can tell us minus 15 rupees. And when it comes in absolute numbers, it is 485. It is 485. So now when we buy a stock, at 500, say like for example, I am buying a stock at 500, this place. If it is going up, and if it is reaching 550, everyone is happy. I am absolutely happy. I will book a profit of 5,000 rupees. But say like for example, the moment you buy the share, it starts dropping, and if it is reaching to 400, what happens? You are making a loss of 10,000 rupees. That is 20% of your actual capital. So which is like, you don't know where it is going to go. We can see many shares which is dropping 50% on a one single trading session. So that kind of time we cannot able to manage the risk. We have to manage the risk effectively. So what we are supposed to do is, we should put a stop loss. Say for example, you are buying a share at 500 rupees. So if you have kept a stop loss at 485, so what happens? You bought here. The moment you bought, say like for example, it went up. After that, again, if it is coming down, and it is coming down, when it is hitting, crossing 485, your position is closed. With the minimum risk of 1,500 rupees. So don't you feel that there is a big difference between losing 10,000 rupees and 1,500 rupees? Yes, it is. We are saving, or we are protecting our capital. See, the biggest challenge in stock market trading or any kind of trading is protecting the capital. So in this business, capital is very important. So with this minimum loss, we are exiting our trade, and we can be prepared for our next trade, which is going to be profitable. So stop loss is very important. Keep stop loss as your friend, so that he will be always with you in each and every trade. So let it be an intraday trade, or let it be a delivery trade, whatever it may be, don't ever trade without a stop loss. So now we understood what is a stop loss. Next factor is trailing stop loss. So this is trailing stop loss. So assume that I am buying again a share of 500 rupees, and I am keeping an actual stop loss of 480 rupees, 485 rupees. Okay, 485 rupees. So now we are expecting a target of 550 rupees, and same thing, time 5 to 15 days. So now how do we know, how do we trade effectively? How do we trade effectively? Number one. Number two, how to take the complete movement of the market. How do we take the complete movement of market? See, you are buying a stock at 500 rupees, and you are keeping a stop loss at 485, and if you book a profit at 502, there is no big fun in doing this trade. This is utter foolish. So I'll tell you that taking a risk of 15 rupees per share and booking a profit of 2 rupees is absolutely nonsense. So we should take the complete momentum. If the stock is not moving above 502, and if it is reversing and hitting the stop loss, that is absolutely fine. But you bought a stock at 500, it went till 502, immediately you booked profit. But after you booking the profit, the stock will reach to 550 rupees at the same mentioned analyzed time, 5 to 15 days. Then what you are doing is, for taking a 2 rupees of profit, you are taking a risk of 15 rupees, which is not acceptable. So what we have to do is we have to trail our stop loss. Say like for example, when you buy a stock at 500, you are keeping a stop loss at when you buy a stock at 500, you are keeping a stop loss at 485. That is actual stop loss. This is just for an example. The what is the percentage of stop loss calculation, everything will be coming in the course curriculum, because for every instrument and every types of trading method, the stop loss percentage or the price is different. So it cannot be unique. It cannot be unique. Even the methods are not unique. So for future, stop loss is different. For option, stop loss is different. So we have to learn it separately in its own way. So when you buy a stock at 500 and when it moves to 502, sorry 505, you have to shift your stop loss to 490. So which is from 15 rupees. From 15 rupees risk, you are bringing down to 10 rupees. From 15 rupees risk, you are bringing down to 10 rupees. Next, when the stocks moves to 515, when the stocks moves to 515, so you should shift your stop loss to 505. So now 505 490, 505 490, just a minute. Yes, same stop loss. That no, here we are bringing our stop loss to 10 rupees. That means my cost is 500, and from the actual stop loss I have revised to 5 points less because the stock has moved upside. So coming back again, the stock moved 515. Now my stop loss is 505. That means I am into 5 rupees profit. So I'll also show you the graphical view. When the stock moves to 525, shift the stop loss to 520. When the stocks moves to 530, shift the stop loss to 525. When the stock moves to 540, shift the stop loss to 535. When the stock moves to 550, book profit. Always book profit when the target is done. Don't wait for any further move. Say like for example, when your analysis says that the stock has done its target, book profit, let it go to 600 rupees. Let's not bother. Because whatever the analysis we did, 15 rupees risk and 50 rupees profit is very good, and that is done. 1:3. It's 1:3.3 risk reward ratio. So that is done. So why do you want to wait more than that? Let's get into the next trade setup. Let's get into the next trading. So say like for example, you are buying a stock at here, and slowly if the stock is moving like this, so your stop loss should be, you kept your stop loss initially at here, and when the stocks moves up, you should slowly, it should go along with the price, and when the stock reverses, you should take the complete benefit. Your position should get closed here till the stop loss crosses your actual price. It is you are holding some risk. There is some risk. When it goes above the actual price, you are, this is called as trailing stop loss, and you are into profits. Say like for example, the stop loss is moving, the price is reversing, the market price is reversing. Yes, you are taking the benefit of your cost price. From here to here, you are taking the benefit. Say like for example, this price, if it is reversing, you are taking a benefit of from here to here. So we'll have more details when we get into the curriculum. As of now, you understand that this is the trailing stop loss, and which is very important. Trailing stop loss is very important. Stop loss is the most important. Without a stop loss, any trade will not be a successful. Any person also will not be a successful comparing to the stock market industry. Next, what is stop loss? How to play stop loss? What is trailing stop loss? Why to trail stop loss? So as I told you, unless you trail stop loss, you cannot able to take the complete momentum of the complete profit or complete benefit of the stock market. So that is very important. So we have seen. So this slide is pending. Margin, exposure, turnover, brokerages. So now we have seen this, how to add indicators, stop loss in delivery trading, bid price, ask price, that we can see later. So margin exposure. So let's see what is required. Margin exposure, turnover, brokerage, taxes. All three are not required. Okay, margin exposure. Coming back, you can see this particular area. Margin in the sense, the actual capital, the balance in your trading account. In your trading account, the account balance in your demat account is called as margin. That means, if someone asks me what is your capital or what is your margin, my margin is 1,37,040 rupees is my present capital. This is called as margin or capital or balance, which is actually there in your demat account. You will be having 10 lakh rupees in your bank, but that is not considered because you will be having that for a different purpose. So what is the available amount? What is the allocated amount for trading, which is actually there in your demat account? That is called as your capital or margin or balance. Next, exposure. Let's come to margin funding. Okay, let's come to margin funding. Margin funding in the sense, for a delivery trading, some brokers, not everyone, some brokers, say like for example, if you are having 1 lakh, if you are having 1 lakh rupees in your account, the broker will give another 1 lakh rupees to take delivery trading, not intraday trading, delivery trading. Okay, so delivery trading. And so how much your capital becomes? Your capital is becoming 2 lakh rupees. So what happens? Your capital is actually becoming 2 lakh rupees, so that if you are, instead of making 5k profit, you can make 10k profit. And again, the negative side is, instead of making 5k loss, you can make 10k loss. So always it is advised or recommended not to take margin trading unless you are a skilled trader, unless you are a effective trader. If you are very expert, after becoming expert, yes, you can take this leverage. Until then, it is not required. And the key which is to be understand is, whatever is lying in your account, only for that double the time they'll give you exposure, which is called as margin funding, and it is used only for a delivery trading. And the interest will be charged. There is charges for this. See, you are borrowing the equal amount which is lying in your trading account, right? Say like for example, if I'm having 50k, I am borrowing another 50k. So who will give you free money for this? So for this 50k alone, the broker will charge in between 18 to 24% interest per annum, depending upon the broker. Only for the used days, not for the complete year, only for the used days. Say like for example, you have used this 50k for 15 days. That 15 days they'll charge you interest. So you have to make profit covering that interest. So if you are not sure about the analysis, don't use these kind of facilities. So now coming back to exposure. So this is the main twist which has been given by the brokers. Say like for example, exposure in the sense, it's like a virtual credit limit which has been given to you during the trading hours for intraday trading, especially to trade more, in the sense to make more profit, to make more loss also. So coming back, exposure in the sense, for example, if you are having 10,000 rupees in your account, if you are having 10,000 rupees in your demat account, so now the broker will give you 10 to 40 times more amount of your actual capital to take positions in intraday. That means if your actual capital is 10,000 rupees, you can take positions for 2 lakh rupees to trade in the stocks. Say like for example, if you are buying a stock at 500 rupees, you can buy only 20 shares for your actual capital. And say like for example, you are selling at 20 rupees, 5 rupees profit, you are making a profit of 100 rupees. If you are making a loss, you are again making a loss of 100 rupees, which is completely manageable. With your actual capital, if 100 rupees loss is fine, 100 rupees profit is fine, which is we can easily manage. But if you use the full exposure, you can buy 400 shares instead of buying 20 shares, and you can make 2,000 rupees profit. Yes, it is, when you make profit, nobody is going to ask. But if you make loss, what happens? Out of your actual capital, you are losing 20%, which is not acceptable, which is completely wrong. So do not use the full exposure. You can use the limited exposure. What is limited exposures? 4 times. That means if you are having 10,000 rupees in your account, you can take up to 40,000 rupees. That is 4 times. Still 4% loss or 4% profit is manageable. Out of 10K, if you lose 400, no, this is not going to affect my regular life or routine life, right? And if you make profit 400, yes, it will be used for something, not everything, but something. So use the exposures wisely. As there is an opportunity, don't use everything. Okay. So coming back, margin exposure. Now the important factor which is in stock market is short selling. So what is short selling? So for that, let's understand the normal process. Let me see what is left out. Turnover brokerage charges. Brokerage in a traditional broker, it is 20 rupees per buy and 20 rupees per sell, irrespective of the volume. Per order, it is 20 rupees. So Upstocks is into this only. Whatever you buy, whatever you sell, per order it is 20 rupees. And taxes, it is applicable. And turnover, whatever is the transaction we do, that is called as turnover. And taxes and SEBI charges, everything is applicable, that cannot be avoided. Okay, so let's complete what is left out. So now coming into the basics of stock market again. Say for example, the technical terms, buy or long, that means both are same. If I tell long ICICI Bank at 320, in the sense I am asking you to buy ICICI Bank at 320. When I say as buy ICICI Bank at 320, that means I am asking you to buy ICICI Bank stock at 320 rupees. Long in the sense both are same. Say like for example, I am buying at 320, target is 330 and stop loss is 315. So that means I should buy around 320, 321, 319. I should keep a target of 330, 328 and 332. So something around that figure, and stop loss should be strictly around 315, 314.5 or 315.5. So price should not be changed, especially in stop loss. And again in the buy price, the entry price also should not be changed. Say like for example, coming back, when you buy a stock for 400 rupees, when you buy a stock for 400 rupees and you sell for 420 rupees, you make a profit of 20 rupees, which is very normal, everyone knows. When you buy a share of 400 rupees and when you sell it for 380 rupees and there is a loss of 20 rupees, everyone knows. It's a very basic example, profit and loss, third or fourth standard max, right? So it's a very general term, everyone knows this. But short selling in the sense, it's a very important term. I am expecting a stock in downtrend. I am expecting a stock in downtrend. Say like for example, if continuously the stock market is trending down, then if you have to only buy, how will I go and buy? I know that stock is going to go down. So how to trade? We can do short selling. Short selling in the sense, selling a stock at higher price and buying at lower price, which is reverse process. Say like for example, I am selling a stock which is at 400, anticipating that the stock is going to come down, and I am closing this, I am buying this again by 390 rupees, that is 10 rupees profit. Again I'm anticipating the stock is to come down, I'm selling at 400 rupees, but the stock is turning up, going against my direction, so I'm closing in 420 with 20 rupees loss. Okay, so the pact or the twist in this short selling is, if you do a short selling, you should cover it in the same day. That means in short selling, first action is selling at 500 rupees. Second action is buying at the lower price. It gives you profit. Selling at higher price and buying at very higher price will give you loss. Next, short selling, you have to close it in cash market intraday itself. That means you are selling a stock, you are selling 10 stocks of ABC company, which is you don't own. You don't own. You are not having, you are not the owner of a stock of 10 shares of ABC company, but you still sell anticipating there is a downtrend. That means you should buy that before the market get closed. That is approximately before 3:15 p.m. The broker will not give time till 3:30 p.m. to cover the stocks. Roughly in between 3:15 to 3:20, you have to close the stocks which you have already short sold. Only for short selling, this is the criteria. The stocks which you have bought, you can sell it any day if it is a delivery trade. Just to make you a simple more example, say like for example, I am a vendor, I am a mobile shop vendor. So a client is coming and he is asking for an Apple phone, and which is costing around 30,000 rupees. And I am calling my dealer and asking iPhone 7. He is telling yes, it is available. He is giving me some margin, and I am telling that you come back tomorrow morning. I'll give you the mobile, but you have to pay the charges now. I'll give you the bill. Yes, the transaction is done. And I am calling I have sold this for 30,000 rupees. iPhone 7, I have sold this for 30,000 rupees, and I'm calling my dealer, and he is telling that I don't have that mobile now. So I'm sorry, but I have already done the transaction. So I'm calling one more dealer. He is telling, yes, I am having the mobile. It is 28,000 rupees. So deal is very simple. I am selling it for 30,000 rupees. I am buying for 28,000 rupees. I am making a 2,000 rupees profit. The transaction is done. Say like for example, the second dealer is telling, yes, it is available, but it is costing 33,000 rupees. I have to buy because I don't have time. The next day morning, the client will the customer will come. So before next day morning, I have to provide. Even if he is telling 50,000 rupees, I have to buy it and I have to give. So with a loss of 20,000 rupees. Actually, it does not happen, but I'm usually telling. Even if he is telling 33,000 rupees, I have to buy this and I have to give with a loss of 3,000 rupees. So in simple, short selling in the sense you have to close the transaction in the cash market in the same day, whether it may be a profit or loss. Clear? So it's done. So next is trigger price. We'll see later. So news. Do not trade in news. Watch news to avoid the stock. So world market, this thing again I'll teach you in the live session so that you can ask some questions, and I'll give you some explanations on that. So let me see what is left out. So I think it's done. So this is settlement cycle. So that means the profit or loss which will be settled in the same day. Say like for example, if you are doing some 500 rupees profit in today's trading, that will be settled in the same day, which is called as T, transaction date. Next, clearing of trade through exchange, in the sense, for example, that is what I told you. The profit or loss will be added in your account in the same day or the next day. In today's scenario, it is happening on the same day itself. Say like for example, settlement, in the sense, if you are requesting a payout, say like considering today is Saturday, after 5 o'clock if you put a payout, it will take 2 days. Or else if you put a payout on Monday or Tuesday in the weekdays, it will come to your account in the next trading day maximum. Generally it happens in the same day. So that is called as clearing cycle. So that's it about the basics of stock market. So still a detailed study on Nifty is required. So that will be coming into the Nifty session. Nifty, we have a separate sessions. So we'll have a clear study on Nifty analysis, everything, the components of Nifty, all those things we will study in the Nifty sessions. So any questions related to this, you can get into touch with the mentor directly. That is, you can contact me, you can contact Abhilash, you can contact Satish, Vidya in the clarification session, or you can text our support ID. Thank you.